Hello everyone. So, how can I be a successful trader? To be a successful trader, you should have a key qualities that we're going to discuss. Before we jump into the topic, if you're not subscribed my channel, please do subscribe, like and share. It will motivate me to share my knowledge and definitely it will help you in your trading journey to become a no loss trader. How can I be a successful trader? To be a successful trader, you should have the qualities which we're going to discuss now. Many are called, but few are chosen. You ever hear this proverb? Yes, this is certainly true for trading. In fact, there is even a rule in trading about this, the 90-90-90 rule. So, what does this rule say? 90% of traders lose 90% of their money in 90 days. In my previous video, I have briefly discussed about the trading rule 90-90-90 rule. So, if you have not watched my previous video, please watch for the better understanding. Expectations. So many start trading because they have seen or read about success stories. People become rich overnight. They might even have a friend who has been successful in trading. That's a famous word. How hard can it be? So with this approach, the failure is imminent. So the expectation will be how you see in the picture. The reality will be different. Not having a plan. If you fail to plan, you are planning to fail. A great word from Benjamin Franklin. Trading without a plan results almost certainly in failure. Your trading plan should include definitions of your setup, entry, stop loss, profit taking, trade management, risk management, and even money management. Okay, you have determined how you will trade, what defines your entries and exits, how much of your capital you will risk, and how you will manage your trades. But do you know what is the expectancy of the plan? Do you know how much trades you will win on average? And how many you will lose? How much money can you expect to make? Backtesting your plan, executing it flawlessly time after time on historical data will give you the information and the confidence to execute your plan time and time again without hesitation. Backtesting your plan will surely give you a successful trading journey. Emotions. So if you are greed or fear, boom. This is the big one. If you didn't take time to create a trading plan and backtesting it, you don't really know what you are doing and emotions will have the best of you. Fear, greed, hope, excitement, anxious and frustrations will drive your hard-earned capital away from you. Results of these emotions are trading too much, letting your losses run and cutting winners short, revenge trading, over leveraging. I could say more emotion factors how the trade will affect, but it will take lengthy duration. Just know that emotions are your biggest enemy when trading. For the best results, you should be in stoic state when trading. Alright, the next, ego. The famous word from Warren Buffett. Failure comes from ego, greed, envy, fear, and imitations. So ego, the market can remain irrational longer then you can remain solvent. If you want to prove the market that you are right, you are doomed to fail. The market is always right, no matter what happens. So you better learn to accept that your analysis or predictions of what would happen was wrong and cut to your loss fast. The next key quality, lack of knowledge. It takes many years to learn a skill or a profession. Trading is no different. If you think about making lots of money without putting the time in learn and test, you pretty much guarantee yourself to fail. You would not want a lawyer without education to defend you in court, or a self-proclaimed surgeon who learned on YouTube to operate on you. Who do you? Trade capital too low. If you are starting with a low capital, you will tend to try and make it grow fast, resulting in taking too many trades, too high of risk, too high leverages. If you start with low capital, you will have to okay with fact that grow slowly. It will take a lot of time to build up sizable account. Buying or following signals. There is no such thing as easy money. You might think that you don't have the time to learn about trading, making and backtesting a trading plan. So why not follow signals? Ask yourself what you know about this service. How profitable is it? And don't just go for the claims they make. Do you know anything about the reason for the signal? Why was it triggered? Why is the company selling signals if they are so successful as they claim? Philanthropy. So stay away from the signals unless until you are much confident on their service. Indicators overload. Indicators can help you make decisions for a trading, but too many indicators can and will lead to opposite signals or analysis paralysis. Most indicators are derived from price, so it makes sense to learn how to read the price action and discover the story behind the candles. The next, shiny object syndrome. You took the time to develop a trading plan and even tested it, but you run into a drawdown. Rather than counting on your experience and the expectancy that you know is there, you look for a new shiny method of trading. Until the same thing happens again with the new method, rinse and repeat, never giving the chance for your original method, which you know was working when you tested it to prove it works. You look for a new shiny method for trading until the same thing happens again with a new method. Rinse and repeat, never giving the chance for your original method, which you know was working when you tested it to prove its worth. Alright, I think I have provided the main reasons why the new and inexperienced traders who fails and the qualities one to hold for to be a successful trader. Knowing why you fail is one thing. Doing something about it is not a small feat. But with enough dedications, persistence and the right mindset, you can prove these statistics wrong. So learn and earn. Subscribe Target Trading YouTube channel. Be connected and be no loss trader.